Welcome back to another episode of Travis. Can I pretty please have this? We are talking about something I'm just like weirdly excited about today. I mean, I am weird to begin with. A question I get a lot of times, especially from new doctors, so young in your career, and you are recently purchased a practice or you're a 1099 associate, the question comes up, what can I deduct? Like, what are the things that I should be writing off? And, we typically say, well, whatever business expenses you have, right? But you hear about your buddy who's writing off everything under the sun, and you're like, well, what should I be writing off? What can I deduct? Because the more you can deduct, the more you reduce your income, which reduces your taxes, which is what we all want. But we want to do it legitimately. So today we're going to talk about 25 legitimate write-offs for doctors that every doctor should consider. I'm not saying it applies to everyone, but it's something that should be on your list to look through. And then we're going to talk about 10 things that, if you deduct, will make me sweaty in the pits. Maybe your buddy's doing it, but does that mean you should be doing it? And let's get into it. Here we go. Okay, the first thing I want to call out is this applies for 1099 associates. So if you're an associate doctor and you're paid as a 1099, the 25 things that we'll go through apply to you. If you are a W-2 associate, I am oh so sorry, but the tax code doesn't like you to be creative. Now, you save some money on payroll taxes that your employer pays. So don't get all, your panties in a bunch over this. But if you are a 1099 associate, this is for you. And if you own a practice, this is for you. Now, if you own a practice, I am not going to talk about the regular practice expenses, your lab fees, you're paying your staff, rent, all that stuff. We're talking more on like the gray area stuff of like, hey, I'm going on this vacation. Do I deduct it or not? Like those kinds of things. We're going to talk about. Okay, 25 things. Let's start with number 1. Now, maybe you might consider this like a practice expense. We're just going to go over it. Malpractice insurance. Make sure you deduct that. All right. Anticlimactic, number 1. We're talking like first categories like insurance and professional fees. So malpractice insurance, number 1. Number 2, if you have business liability insurance, that's probably in like your practice overhead. But even like as a associate, sometimes you have this. I don't know if you necessarily do, but if you do, your business liability insurance you want to deduct. Number 3, health insurance premium. So if you're self-employed and you have your own health insurance, you can deduct that. There's some nuances there, but have it on your list. Number 4, professional license fees. We're talking annual renewals required to be a doctor. You can deduct those. The membership dues. So if you're part of, national associations, the American Association of Dentistry, the ADA, who's I think on the naughty list for a lot of dentists. Anyways, membership dues, deduct those puppies. That's number 5. Number 6, continuing education. So going to CE courses. I just saw a bunch of advertisements for CE on the beach for dentists in Maui. If you went to that, that's deductible. All right, number 7. This is, kind of like dental tools. Okay, we're talking like supplies. Included in that is your dental school kit. So when you're in dental school, you have to buy a kit of like supplies. You can actually deduct that once you start practicing if it's close enough to when you were in school. It needs to, that will depreciate over time. So if it's been like 7 years, probably not. But if it's been not that long since you were in school, you can actually write that off. part of it, and other like tools, supplies that you might have to buy. Number 8 is dental equipment. What's the difference between dental tools and dental equipment? Dental tools and dental school kit, I'm referring to this as like smaller supplies, like less than $1,000. Dental equipment is if you are an associate, sometimes you buy things that are a little bit more expensive. Maybe you got some really nice lubes. Maybe you bought your own like implant thing because the office you worked at didn't want to buy it. Like things like that, you can make, definitely write off. Okay. I don't feel like the first 8 have had a lot of punch. So let's get going. Hopefully this gets punchier. All right. Number 9, this is boring. Office supplies. Like, even if you're an associate, like you got to buy like supplies to like do record keeping. You might like have a number 10 is business cards, right? If you're going to go meet and network with people and you have business cards, deduct the expense of that. Number 11 is computer and technology, right? So if you buy an iPad or a computer to do work stuff on, to do your CE, like deduct that computer. Number 12 is your cell phone. A lot of times you got to have your cell phone to be on call, take emergencies, whatever it is. You can deduct part of your cell phone plan. You got to prorata it based on how much you use it for business versus personal, but it's definitely something you can legitimately write off. Number 13 is internet, same kind of boat as cell phone. Like if you're, making notes from home on your computer, your internet costs, you can write off part of that. You got to prorate as well. Try to say like, I use it half the time for business or 30% of the time for business, something like that. But it's something you can definitely write off. All right. Number 14, something that people just love to just milk this puppy is your vehicle expense. Lot of caveats in this. We're going to have a whole episode we're going to have like a whole month of episodes just on vehicle expense. The IRS has come out with a lot of guidance on this one, but definitely want to deduct your vehicle. Now there's 2 main caveats with this without going too deep. You can deduct just the standard amount of like if just the miles. So regardless of what car you're driving, if you keep track of how many business miles you're driving, the IRS has a standard mileage rate, which is like 70 cents a mile this year. So if you drive, 1,000 miles, you can write off $700 for your vehicle usage. The other option versus the standard mileage rate, the other option is deducting the full cost of your car and all of your auto expenses. And typically that second option only makes sense if you have a car that's, let's just say, more than $30,000 or $40,000, right? If you're driving an old beater, my heart is with you. You are my soul mate in the accounting world. But you probably don't want to like deduct that thing. All right. Number 15, this is different than the vehicle expense, is parking and tolls. Parking and tolls are always 100% deductible. Make sure you're deducting those. And then number 16 are travel costs. So if you're going somewhere for a CE course, the cost of those flights, the cost of the hotel, all that stuff, meals while you're out traveling. And the real rule here, this is probably another episode, deep abuse happens in this category. The like rule to keep in mind to deduct travel is, what is the primary purpose of the travel? If the primary purpose of the travel is personal, but you kind of do a little bit of work on there, like the IRS kind of has rules that you can't deduct that much of it. But if like the primary purpose is business and you do a little bit of personal, that's actually kind of okay. So there's nuances this, but make sure that's on your radar. All right, number 17, your home office deduction. You want to make sure and do this one. Have a home office. Again, there's some nuances with this. And there's kind of two options that you have, kind of like with the automobile. Like there's these two options, standard mileage rate or deducting the automobile. With the home office, you have this thing where you can like deduct an actual portion of your home. You prorate the rent or mortgage, property taxes, things like that. Or you can do this thing if you have an S corporation, called the Augusta rule, where you rent out your home to yourself for a certain amount of days. You technically can't do both. A lot of people do both. Like they'll have home office and they do Augusta rule stuff. You're technically not allowed to do that. Maybe you didn't want to listen to this episode because that's super buzzkill by me telling you that, but you got to pick one or the other. All right, number 18 is utilities. That's if you're doing the home office deduction, you can kind of bring in some utilities on the home office deduction. Got to prorate those as well. All right, number 19, my personal favorite, accounting fees. If you're paying an accountant, deduct that. Number 20, legal fees. A lot of times when you're like looking to buy a practice, you'll like pay an accountant, you'll pay an attorney, or like pay an attorney to review your associate contract. Like those are all deductible. Number 21, any advertising and marketing that you're doing to, obviously if you have a practice, like you're already going to deduct advertising and marketing. But like if you're an associate, you might be doing things to advertise yourself. You could create your social media accounts and maybe you pay certain like add-ons on social media, or branding for your own self. You can definitely deduct those. Number 22 is work attire. This one's used and abused. So here, like IRS, man, like there's been a lot of people that have done, have pushed boundaries on deducting work attire. The IRS basically is like, hey, if the clothes that you're wearing to work are so atrocious, you can't wear them out to a date on Friday night, then we'll let you deduct them, right? So like think scrubs, think lab coats. Those are usually deductible. But like a really nice pair of pants, right, probably isn't, according to the IRS rules. Hey, I'm just the messenger. That's just how they would view it. But there are, a lot of people are wearing scrubs and lab coats. And with that is your dry cleaning. If you get those dry cleaned, that's deductible for any legitimate work attire. Number 23 is meals. Oh man, this is one. We love meals. We got to have them, right? Otherwise we'd all die. So why not deduct them? So the rule here is it's got to be like with somebody and it's got to be for business. Now the IRS, they have certain rules around meals. Like if it's more than $75, you have to have the receipt to deduct it. It has to be with someone else. You can't be like having it by yourself unless you're traveling like at a C course. The meal, like you can't deduct a meal by yourself. So, but the IRS puts it on you to like keep documentation of that stuff. So be cautious with that. Like I see a lot of people deducting like their daily trip to Starbucks and it's like $5 every time. And you clearly like were in the drive-through line and not like meeting with someone. Like that would be easy for the IRS to pinpoint and like disallow all of those Starbucks deductions. All right, number 24 is, and this is maybe more for practice owners because they have more duties for children, but it's putting your kids on payroll. That's 24. Just consider it. Like if you can come up with legitimate things for your kids to do, you definitely want to pay them for it because you'll get a nice little deduction. And if they are below the standard deduction, like think like $15,000-ish in annual wages, which most kids are going to be below that amount, then they don't pay taxes on that income. So it becomes a really nice thing. And then you can do Roth IRAs for the kids, which is like great savings account. So kids on payroll is a good one. You just got to be, strategic about it. Number 25, probably my favorite, every accountant's favorite, retirement plans. So we're talking like SEP IRAs, solo 401ks, defined benefit plans. You can do these even as a 1099 associate. You can put a lot of money into these retirement plans, and it's a great way. It's a great way to save money on taxes today. and also save for the future. So that's a good one. Now, I do have 2 extra credit things. So we did just 25 things that everyone should consider. Hopefully, there was something in there you hadn't thought about, but it just feels a little anticlimactic. But it's a nice to have the list, to go through the list, think about your life, making sure that you're capturing all those things that apply. All right, the 2 extra credit things. One is potentially your spouse on payroll. This actually usually doesn't save you any money on taxes. Like if you're married and you file a joint tax return, paying your spouse moves money from one pocket to another pocket, but it goes onto the same tax return. So it doesn't like reduce your taxable income. But when you move it from one pocket to the other, you pay payroll taxes. So it's actually not a good thing to put your spouse on payroll, but you may want to do it to increase your retirement plan contributions. Like you can only max out so much for yourself, but if you have a spouse, they can max out some additional amounts. Or if you're going to have like your spouse has like have your spouse have a car on the books, that's pretty aggressive, I would say, for most dentists, but it's something you could do. And then you definitely want to have your spouse on payroll if you're going to go down that route. So, take that with a big chunk of grain of salt. The other one is one that you'd probably lose in an audit, but I don't want you to lose in an audit. Like I kind of want to develop a stance on this, but it hasn't been developed. And in all my research, it's like, it's pretty high risk, but I'm thinking about massages. So, the amount of dentists I know that complain about how hard dentistry is on their body is basically every dentist I've ever talked to. And, and I'm not saying like it's legit, right? I'm not trying to make little of that. But like on your neck and your back and like just your position and your posture, it is hard on your body. It really is. And you need to treat that. And massages are a great way to do that. And I think massages should be deductible, but that doesn't mean they'll hold up in an audit. So the big thing here with massages is if there's a personal benefit, the IRS isn't going to allow it. Like they're big on like, hey, you're just getting a personal benefit and deducting it. But if you can argue that the only reason you're doing the massage is business related, and you feel like you can take that to the IRS, fight it in the courts, then go for it. Again, it's something that if I was a dentist, would I deduct it? And will be willing to fight it? I probably would, honestly, but I'd probably lose if the IRS challenged it. And then I'd have to decide, do I want to fight it in the tax courts or do I just want to take that loss and move on? So you're not going to go to jail for something like that, just FYI, but something to consider. I think massages should be deductible. All right. 25 things with 2 extra credit things that every dentist should consider deducting. Now let's talk about 10 things you do not want to deduct. The first 2 are going to be a little counterintuitive. The first one is life insurance premiums. Second one is disability insurance. The reason you don't want to deduct these is if you don't deduct them, then if you have to draw, if you're benefiting from the policy, you don't pay taxes on it. So disability is a good insurance, a good example of, if your disability premium, whatever that is, let's say it's a couple $1,000 a year. If you were to deduct that, that wouldn't save you that much on taxes, maybe like $200 a year on taxes. But if you had to draw on disability, you would get, $60,000 a year, and not paying taxes on that will save you, let's just say, $12,000 a year, right? So would you rather save $200 today or potentially save $12,000 tomorrow? I'd take the roll the dice and prefer not to pay taxes on that disability policy. Same thing with life. Obviously, you won't be around to get the life insurance benefits, but you want to set up your beneficiaries as best as possible. 1 and 2. Number 3, gym memberships. The amount of people that want to deduct their gym memberships is very large and deep. And maybe you could argue this is like my massage case. Like, hey, I got to stay healthy. I got to stay fit to be able to do dentistry. It's demanding on the body. but the IRS is just going to see too much personal benefit there. And I don't think you stand a chance on that one. I think massages should be deductible. Sorry to go back to that one. I hate massages. I like this. I'm not a massage guy. Like I remember my first massage, it was like, I was hyped up. Like everyone's talking, oh, like, I just need a massage. And I was like, finally got a massage. And I was like, it was awkward for me. I didn't like it. So, but if I was a dentist, I probably would be getting them. So like, that's why I'm like, yeah, maybe for me, I'd deduct it. All right. Number 4 of don'ts is haircuts and styling. You look good. What did Deion Sanders say? He said, like, you look good, you feel good, you feel good, you play good, they pay good, right? That might be what you're thinking about the haircuts, but man, you're going to have a hard time standing that one up with the IRS. I don't think you stand a chance. I wouldn't deduct it. Okay, number 5 is meals when you're alone. So don't do it. I don't think it's worth it. I mean, it's not the end of the world. I mean, it is the end of the world. I mean, like, you're not going to go to jail for those kinds of things, but like, really you need to be with somebody talking about business to deduct a meal. So those solo meals, probably a no-go. Next, number 6 is entertainment. So we're talking like sporting events, concerts, golf, taking, people whining and dining them. Those entertainment expenses are not deductible. There's even like this entertainment category we can put in your tax return, and then it just is backed out. Like it's not deductible. So, a lot of times people try to call those things marketing. If you want to defend that with the IRS, you can take that liberty, but a lot of times they're going to see it as entertainment. All right, number 7 is personal travel. So we talked about travel and the things that you should consider, and we're going back to that rule of like, what's the primary purpose of the travel? And if it's personal, clearly personal, don't deduct it. Now, if you're doing some business, if you stay an extra day and you meet with some people, like things related to that meeting and that extra day, you can deduct. But if it's not a primary business meeting, then you can't deduct the airfare, the lodging, those kinds of things. All right. Number 8 is childcare. This one comes up a lot. So like on your personal tax return, there's a place where you can enter childcare. But you can't fully deduct it as a business expense. This one kind of like just feels wrong, right? Like I cannot work if I don't like take my child gets taken care of from somewhere, right? Like clearly that's the purpose of childcare. Like why it isn't fully deductible, you could argue that, but it's been tested and tried in courts. And on your personal tax return, there's a dependent care expense thing, and you don't get a huge deduction for it, if I'm being honest. Like if you pay $15,000 a year in childcare, you might get $1,000 credit, something like that. So it doesn't do you a lot of good how it's structured right now, but it's not really allowed to be a business expense. Number 9 is one that sometimes bugs people. It's your personal loan interest. So a lot of times when you're in dental medical school, you got to take out credit card debt that has high interest expense, or you take out a personal loan to kind of cover yourself. But it's like all because you're trying to like get education or getting started. Any personal loan, the interest you pay on that is not deductible. Even if you feel like it's for your profession and stuff like that, like it's not going to be deductible. Number 10 is medical expenses. So just general medical expenses, like you can say, hey, like I gotta, dude, I actually took this pill one time. Like what was it? We had this flu going around my house, and I have 4 kids. They all got it. My wife got it. My wife was knocked out for like more than a week. It was gnarly. And I was somehow unscathed. And my wife was getting some prescriptions from the doctor to like, help the kids Tamiflu or whatever. I'm not good with all the medical stuff, but there was this pill. Oh, you could take the pill one time and it would give me basically immunity. Or if I got symptoms, it would be a whole lot worse or whole lot better. This one pill to take to like not get sick. And I was thinking to myself at this time, like my work is just busy. I'm in startup mode. I'm just like busy, busy, busy. And the idea of me having to like get knocked out for a week, like I can't afford that from a work standpoint. But guess how much this one pill was? It was like $300 or something, hundreds of dollars. And I was like, oh shoot. Like at first I was like, yeah, I want this pill, whatever it is. I'll just take it so I can like not be disrupted in work. But then I was like, oh, it's $300. And I had to like really think about it. And I was like, you know what? For me to like be able to make sure I'm working, it's worth it. Like it's worth $300 for me to not be disrupted for a week of work. So I made a business decision to buy that pill and not get sick. But did I deduct it? No, I did not. So it was strictly business decision, but because it was benefiting myself as well, like there were a lot of personal benefits of not getting sick, sleeping better, having a better morning and a better day, right? More than just working. It would not have really held up if I did decide to deduct it. So medical expenses are hard. I think that's why massages are going to be hard. Man, I'm talking a lot about massages today. But yeah, medical expenses are going to be a hard one because it's always going to have a lot of personal benefits as well. Even if you think it's like, I'm only doing this so that I can work more, like my pill example, you're going to have a hard time. All right. There you have it. 25 things to consider to deduct for your business as a business expense, and 10 things you probably don't want to touch. Okay. Thanks so much. If you have questions about any of these or things you think I missed, man, I'm sure I missed some stuff. There's lots of things. There's a whole wide world of deductions out there. Shoot me a message. You can send a message on the podcast, whatever platform you're listening to. You can always email me at travis@gouluru.com. That's TRAVIS at gouluru, ULURU.com. Uluru. What a hard word to say. Not even saying it right now. Thanks so much, everyone. And I hope to see you next time.